Good morning, everybody, and welcome. The first session. My name's John Kelly. I'm a friend of Smith Inc. and I'll be emceeing this room, so I'll see you all plenty of times in the next couple of days. For the last 10 minutes of this session, and of every session, the app will be looking for feedback from you on the session for the last 10 minutes. So if you do get a chance, please put your feedback in the last 10 minutes. We'll try and give you a nod when that's happening. Okay. But now we will have Joss Milner and Alan Mintz on the power of one.
Okay. Morning all. Welcome to ATSA and welcome to our presentation. And thank you all for attending. The power of one. In 1998, two accountants founded a startup. It's really hard to know who's who. We look so similar, of course. We developed disruptive technology which we couldn't come up with a good name, we called it Optimist. A lot of you would know that product as Profit Optimizer. So we were the original founders, developers of Profit Optimizer. Over the next 10 years, we established Optimist as a global standard for financial analysis and what-ifing. Basically, Optimist became the standard by which hundreds of banks looked at the way their clients were performing. It became the standard that thousands of accountants looked at tens of thousands of financials of their clients. We set up distribution channels through MYOB Profit Optimizer and CCH through Profit Driver around the world. We sold to many hundreds of banks, including some of those. In 2009, we sold the business to SunGard, a global banking software and services business. Basically, we successfully took on Moody's and S&P in that arena. We sold to thousands of accountants through our channels and set the standard for which analysis is performed on businesses. Right. After selling out, we spent a bit of time, we took a break. We enjoyed watching the market from a distance, and we saw a lot of people attempting to replicate what we had done with Optimist. We started getting invites to speak. We got invites to speak from governments, from the major banks, CEO forums, accounting bodies. Over the next 4 or 5 years, we literally spoke to 10,000 plus of your clients, all over Australia, all over the world. What did we find? We found that cash flow is the major blind spot for businesses. We found that your clients wanted to understand cash flow, that they expected you to be able to explain it, and they expected you to be able to improve it. In 2012, we engaged in some discussions. We basically started talking to accountants in the advisory space, accountants not in the advisory space. We spoke to hundreds of people. Those conversations led to even more discussions. What we observed was the following. We observed that the software advisory market was maturing, many players with an array of complex tools. We concluded, however, that this was not what the market wanted. This was not what you wanted, and more importantly, not what your clients wanted. So, in early 2013, we assembled a really talented team. We've got Tim on keyboards at the back, Alan over here, and myself. And we decided our challenge was to develop software specifically for the advisory market to meet today's requirements. So what does that mean? In 2013, we launched Cashflow Story. Results have been beyond anything we could ever have imagined. Over 5,000 businesses in 22 countries around the world. Countless success stories. Financial component of scaling up in a book by Vern Harnish, which lots of you would have probably know and read, and no prizes for who that was. Why has Cash Flow Story been phenomenally successful? Well, it's really simple. Simplicity. Simplicity, simplicity. So what do we mean by simplicity? What we mean is almost no data entry, minimal. Everyone uses our product in the same way. No keystrokes, just taps and clicks. No implementation required. No training externally, just all inbuilt. And more importantly, and most importantly, a standardized process. So Alan, why don't you have a talk about standardized process?
Thank you so much, Josh. So, as Josh said, for many years we have spoken to thousands of your clients. And what we realized is that I could put up a case study, and I can guarantee you every person in this room will tell a different story about the same business. So what we decided to do is develop a system with a process that you're basically following the chapters in a story. All you're doing is you're turning over pages. And this is the process in very simple terms. A story of numbers. We are all storytellers. A story of numbers consists of 4 chapters. Chapter 1, every person in this room is an expert. Chapter 1 is about your profit. So business understands profit, no issues. Once we've discussed the profitability with your client, we then turn to Chapter 2. And Chapter 2 is about working capital. So whether you're in the manufacturing, service, or distribution, or any industry, Chapter 1 and Chapter 2 are equally important. So Cash Flow Story gives you a very simple explanation that you can read with your client. What is happening to the days? Once we understand Chapter 1 profit, Chapter 2 working capital, some of your clients have invested in other parts of the balance sheet. Land and buildings, plant and machinery, infrastructure. So some of you have got a Chapter 3. Are we getting proper utilization? Now, ladies and gentlemen, you cannot discuss cash flow with any business unless you discuss, firstly, their profitability, then their working capital, and if applicable, Chapter 3. The result of a business is the funding. Cash flow is the result of the movement in your funding. So the way we've developed the system is every person in your practice can pick up Cash Flow Story without any training and basically read the numbers. The system also comes with audio if you want to play it back to your customer, or it's got a story on every single screen to explain the key concepts. Revenue is vanity, profit is sanity, cash is king. It's critical that, as Josh said, cash flow is a major blind spot in a business. The 4-chapter approach is the way to actually explain cash flow. Now, the most amazing thing happened to Josh and I. We've been doing this for 20 years. After spending 20 years explaining to business, developing technology, what we realized is that, yes, we've come up with a wonderful approach, the 4-chapter approach. But what we also realized that no one in the world actually had come up with a methodology to fix the company. Now, if you take the taxi industry in any country in the world, I'm absolutely convinced that in 10 years' time, the taxi industry is going to be very different. Uber, as we know, is here to stay. What we realized is that we wanted to be the next disruptive technology in explaining cash flow to business. Cash Flow Story, the 4-chapter approach, and then after 15 years, we actually decided there is the most simple way you can explain the cash flow result or the cash flow story to a business, and we called it the power of one. Cash flow is the result primarily of Chapter 1, profit, and Chapter 2, working capital. A business has got 7 levers they can play with to fix the cash flow in a company. Cash flow story on one screen produces the power of one. What we are saying today to every single accountant, the cash flow story, the power of one, is the code of a business. You cannot sit with a client without knowing how to fix the business. Once you've got the power of one in front of them, the power of one are what do the 1%ers in Chapter 1 profit and the one-day changes in Chapter 2 working capital do to the cash. So if a client says to you, I need to turn my cash around by $500,000, the power of one says, how many 1%ers or one-day changes do we need to make? And this is the reason you're going to lock yourselves in, is to have power of one discussions every quarter. The power of one also improves the profit in a company. And what Joss is going to show you now about value is going to be a game changer as well for the accounting profession.
So basically, at the moment, we can see where the bang for bucks are. In this particular example, price and cost of goods. We can see what one day's reduction in debtors is worth, quite a lot. So what we're going to do, starting off, is we're going to zero those out, and we're going to look at now, sitting with our client, saying, what are we going to do to improve this business? So for example, if we were to put prices up 2%, right, when people look at price increases, it's always 10 or 20, 15%, it's big. How many times customers even notice a 1% price increase? Sometimes just rounding up has enough impact to do that. So basically, if we put our prices up 2%, look at the bang for bucks we're getting. Look at the improvement in profit, the improvement in cash flow. What if we were to reduce our overheads by 3%? So that's got a small but significant assistance. What if we were to reduce our debtors days by 7? So I think we'd all agree that those changes are relatively simple in terms of they don't have massive impacts on the business. Just chase some debtors, small price increase, small reduction in overheads. Massive benefit, $250,000 improvement in cash flow. This business has got the bank on her back, and clearly we can improve the cash flow and the profit. The problem with that is, whilst our clients want to improve the cash flow and they want to know more about it, we want to have conversations that really capture their attention for the long term. So, show of hands. Who agrees with this statement? Clients love to talk about the value of their business. Right. Almost everyone. Second statement. Show of hands if you agree. They always think their business is worth more than it is. Right. The conversation about value is becoming very relevant. We're moving into the baby boomer stage. We're moving into the stage where there are a whole lot of people that are 56 to 60, 70, depending on how you define a baby boomer. Those businesses are going to be up for sale in the next 5 years. A lot of them. Who's going to buy them? There's not enough people. So that means we have to make sure our businesses are worth as much as possible. So what the next screen enables us to do is have a conversation with our clients about value. So how do we do that? So first thing we do is we calculate the weighted average EBITDA. We can adjust it up or down. In this case, we're saying 760,000. We'll leave it as is. The next thing we do is we say to the client, what do you think your business is worth? Or, depending on how old they are, what do you think we could sell it for or need to sell it for? So we're going to put $3 million into that expected value because that's what this client thinks the business is worth or wants it to be worth. What the software then does is calculates for us the valuation of the business on an EBIT multiple of 1 through to 7. So if we click through that, we can see the value. Tim, just click the arrow, please. Thank you. Right, and then click through to 7. Right, so we are going to use 4. So Tim, if you click on the 4, right, what that does is just lowlights everything else. I want to have a conversation about 4. Now, 4 is a pretty good multiple, but we're looking to improve. We're looking to make this business better. At 4 times profit, this business is worth $3,050,000. Woohoo! We only need 3 million. But there's a catch. The catch is we owe the bank 2.8 million. So if we sold the business, paid back the debt, we'd have $200,000 in the bank. That's a long way short of the 3 million that she needs. Right, the book value of this equity is 1.3 million. We've got a long journey. Now we've got their attention. What are we going to do about it? Well, the answer is we've already done something about it. The Power of One, where we looked at improving profit by $250,000 and cash by similar amount, look what it does to value. The Power of One increases the value of our business from 200 to 1 million. We're not at 3 million, but we're a long way towards the journey.
Just can I interrupt for 1 second?
Sure.
The Power of One, if you think about it in simplistic way, the power, as we said earlier, the Power of One, which we believe is this disruptive technology, the Power of One is the code of a business. The Power of One will help your client improve their cash. The Power of One helps your client improve their profit. And what Joss is now saying is the Power of One will give you a multiplier uplift in the valuation of your business.
So how do we get that? If you just press the plus, that opens it up, and we can see the value. If you cannot, at this point, get your clients to agree to meet at least once a quarter and set the goals, the next Power of One, the next set of changes to drive that value improvement, if you can't get your client to agree to that, you're not going to get them to agree to anything. You've shown them short-term profit, medium-term cash flow, long-term value. Right. Now what we're going to do is we're going to show you some of the new stuff that we've been working on. We've got some new fascinating areas. In the last 2 years, as we've been going on our journey, as we've been telling our story, we looked at probably close to 1,000 set of accounts that effectively scorecards that have been created in our product. And we concluded that one of the big problems with wanting to tell financial stories is that the accounts from which those stories are being based are not set up to tell stories. They are set up to lodge tax returns. So you've got a set of accounts that are basically set up to be convenient for yourselves, and so they should be, to be efficient, so that you can get the accounts prepared, given to the clients, and lodge tax returns as quickly as possible. The problem is that doesn't make for good storytelling. So we've done 2 things to change that game. So the first one is that we have put in what we call the story enhancer. So this is brand new. Our users have yet to see this. It will be released in the next couple of days. So Tim, let's start off with either one, doesn't matter. So we are going to start off with our coffee consulting business. So at the top it says heads up. Cashless Stories detected a few ways that you could tell a better story. So we'll say, okay, we want to run that. If I know what I'm doing, I'm out there, I know what I'm doing, I just ignore it. So it's going to enhance our story. Right, in this case, it's picked up one of the most common things that we find is a set of accounts with no cost of goods, no gross margin identified, no direct costs. So if we think about storytelling, if we're looking to improve a business, how can we improve the business if we don't even know what the margin is? Right, those direct costs are hidden in the accounts. So if this was a service industry, it's basically said to us, there's a fair chance that an element of your salaries and wages, or all of them, are actually direct costs. So it's prompted us to say, what are those salaries and wages? So put in any number, doesn't matter. and we hit update, and it basically rearranges the accounts, takes those amounts out of overheads, puts them into gross margin where they belong, and that's it. So we're running about 13 or 14 tests on a set of accounts and looking to enhance. So let's do one more. Right, the most common situation, of course, is trusts. So when we look at a trust, if we go down to the balance sheet and just look at the check balance sheet. So typically, when we look at a balance sheet, going down to the bottom, we've got that $100 of equity, and we've got that other current liabilities probably where the beneficiary loans are sitting. So we're going to run, the system picks up that you've only got $100 of equity and says, okay, there's a fair chance I know what's happening. So what's the analysis? Going to come up, says, okay, we've picked up the fact that you've got no equity, so tell us what type of entity you are. So we'll say we're a trust. It says this is what I've calculated the equity to be. Is that correct? We'll say yes, it is correct. If it's wrong, we can simply fix it. Then it basically says, well, we think you should identify beneficiary loans because they actually are equity. If you don't want to do it, you just ignore it. Say, yes, we want to do it. Then it says, well, where are they at the moment? Well, at the moment they're sitting in current liabilities. So we select current liabilities. We tell them how much they are. It adjusts the accounts for us. So what that enables us to do is to take tax-based accounting and turn them into stories, which leads us to the second interesting area. So once we'll just finish this off, it's basically now gone through 13 or so checks, said I'm pretty happy with what it's done, and will eventually, slow internet here, produce our new balance sheet. The next area, while that's thinking away, is traditionally, we got the information into the product one of three ways. You either input it yourself, about 3 minutes per column per year, imported it from Excel, or brought it in from zero. Right. What we looked at said, that's actually all good, all fantastic, all works, but we've actually got a better source of information. It's called the tax return. In the tax return is actually most of the information that we need to drive this. So what we did is we went in and worked out how to read the tax returns. So, for example, we go import data. So we could just be adding in the most recent year, so that's what we're going to do here. So we're going to import the data from a tax return. So all we do is we select which tax return it is. The biggest challenge we had with this was getting hold of lots of good quality tax returns, because naturally no one wants to share that. So we eventually got hold of a few. What this has done is read the tax return, worked out which tax return it is, because each one is prepared, looks different, so mild, handy, zero, whatever. It's gone in and found the numbers that are in the tax return. So it's not going to obviously give us every number, but it's going to give us quite a few of the numbers. So what we can do is effectively take a tax return. You don't have to do any work whatsoever. It simply says, oh, I'm a mild tax return. I know where the things are. There's the revenue. There's the cost of goods if it's given. There's the net profit. There's the EBIT. Because we drive our product based on totals and subtotals, a lot of those numbers are in the tax return. This was, Tim, was this handy that we brought in? Yeah. So we just look at the tax return. We know what it is based on some identifiers. We find it in the tax return, and we convert that tax return into numbers. So that's there. We can see what came in. So each year we can just simply roll forward, bring in the tax return for the next period. Or we could start off with a new client, bring in the tax return. So we can turn a tax return into value, with the enhancer coming in on top of that to then complete the story in literally 2 to 3 minutes. Do we have any questions?
If I If I can just add a few points to what Joss is saying. Our history, as Joss said earlier, we developed Profit Optimizer. Profit Optimizer became, or still is today, used by every bank in Australia. It became too complex for the accounting profession. What we've realized is that we've got to create something that every person in your firm can do it the same way with minimal training, and the implementation is absolutely easy. So we want you, the profession, to be able to make a revenue stream as from day one. The 4 chapters and the code of the business being the power of one, and what Joss is emphasizing, creating business value for your clients, is a process that every single person in your firm should be doing on every single client. This is not aimed at the sophisticated clients. Cash flow story is simple to use. Any questions?
Excellent. So we've got an ATSA special for those of you. We've been through all of that anyway. So basically, off our website, we have a shop. Cash flow story is normally $995 per annum plus GST for a 2-user license. That means 2 people, 2 email addresses. Available on all your clients, unlimited number of clients, unlimited number of devices. Works on iPads, tablets, laptops, anything. Right, ATSA special. If you put in the coupon code 2015, 3rd login. In other words, 3 logins for $995 per annum. If anybody comes to us on the stand and buys it on the day, we can set it all up. We will give you a 4th license. And that price is, at that licensing, is renewable. So in other words, if you've got a 3 license, 12 months time, if you want to renew, 3 licenses. You get 4th, you renew 4 licenses. Any questions?
Dashboard, you've got a dashboard seeing you can see all your clients on it, or is it like the historical data of what you've worked on?
Do you want to answer?
So the answer, the question was, Josh, does it keep a dashboard of all the clients that you've entered?
Oh yeah, yeah. So you've got a list of every client. You create a client entity, and then within that you create scorecards. So you'd have all the clients. We also have the ability, if you have clients that love to do the stuff themselves, you can actually allow your clients to log in and see just their own models and cut down versions, so they just see some of what we showed.
That's unlimited number of models you can create for every client. Yes. Yes, one of the features which we haven't obviously showed today
Could you repeat the question, please?
is the ability basically to do projections. Was that your
Yes,
question?
absolutely. Anyone wants to see more, come to our stand. We're just down, basically in the end on the corner, look for the big wall, and we can show you. We've got full projections. We've got a whole lot of stuff we didn't show you.
What sort of training's available? Is the training included?
We basically, there is, a lot of firms don't need any training because there's built-in help and built-in storytelling and built-in audio. But if firms want training, we offer training web-based for free for each firm. So no, it's not a generic course. So there are no additional charges but bar the product.
And sometimes the training is done is send us one of your scorecards. Instead of doing a generic training course, send us one of your clients and we'll do the training on that client so you can see exactly how to value add on that particular business.
Thank you. Please join me in thanking Alan and Joss. Thank you. Thank you, gentlemen.